Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having a fantastic day today. Bitcoin and the broader cryptocurrency market has continued to aggressively crash toward the downside, currently retesting a critical level of horizontal support spanning back since the beginning of May, sitting just at $100,000. In today's video, we're going to be discussing the implications of the loss of this $100,000 support, what this would mean for the macro charts, and potential best and worst case scenarios. Can the buyers defend this last line of support, or will Bitcoin break through, dropping into the low 90,000 region? We are also going to be discussing the broader cryptocurrency market, running a complete contextual analysis, as well as going over the weekly chart, as in just 23 hours, the weekly candle will be closing. Currently, Bitcoin is sitting both under the weekly range high, running the risk of confirming a deviation setup, as well as broken down from the 62.09 level on the RSI. Again, historically, validating steeper corrections are likely to take place. We have so much to be taking a look at in today's video. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in the VIP. To do that, click the pinned comment of the free channel, contact our admin, check out our 50+ month trading track record, or if you want to find out what the VIP is all about, you can watch a 10-minute video showing you exactly what you'll get access to, how it works, and what it looks like. Go ahead and check it out. We'd love to have you in there. Let's jump into the content. So over the past 24 hours, we have seen Bitcoin continue aggressively toward the downside. In our past video, we discussed a short-term consolidation which was developing, which was the symmetrical triangle pattern. The symmetrical triangle pattern broke toward the upside, reaching our target, and since then we have rejected all the way back down to the range low. This has been partly due to the fact, of course, that we have got this weakening momentum on the higher time frame, which is applying this downward pressure, indicating again the sellers are not finding as much demand at these highs than what we would like to see, pushing the price down. But also because of contextual events such as the developing conflicts in Iran. Of course, just over the last few hours, we have had confirmation from President Donald Trump that they did actually strike bomb a nuclear facility in Iran, which has led to, number one, a little bit of a pullback, but number two, as they announced that their aircrafts have left their space, we have seen the market see a little bit of a rally back toward the upside. So with conflict, we see pullbacks. With hope that conflict comes to an end, we see the market come back up. But overall, we have still seen a negative impact on the market as a direct consequence to this uncertainty surrounding, again, the conflicts developing in different parts of the world, the trade deals and tariffs, and the icing on top, the change to the 2026 and 2027 median interest rate forecasts down the line. So a lot is going on, guys, from a bigger picture, from an economic and geopolitical picture, that is really putting some pressure here on the market. So in today's video, we're going to be discussing everything, of course, going into all the detail, discussing all the different potentials, and going over essentially everything you need to know. So let's start on our market data. 24-hour volume is down 18% at 206 billion. Liquidations up 27% at 637 million. So liquidations really starting to push up over here, with 567 million of those liquidations coming from long positions. So again, a lot of downward pressure. a lot of liquidations. We've seen some massive 1-minute liquidation wicks here for both Bitcoin and Ethereum over the last 24 hours. Moving over to the DXY, the market is of course closed over here, but the DXY ended the week on a green. We saw the price come back up to around 98.7 at the end of the week. This was mainly due to the future 2026 and 2027 median interest rate forecasts adjusting upward. Again, that is generally going to be considered as a more of a bearish sign, indicating potentially fewer or later interest rate reductions than initially anticipated, which have pushed the DXY back upwards. Again, also applying downward pressure on the markets. The S&P 500 is still showing signs of weakness over here as it approaches that 6,150 prior all-time high. Of course, with the bearish divergence, higher highs on the price action and higher lows, or should I say lower highs here on the RSI, indicating a strong degree of exhaustion, simply meaning that the strength we have had in this uptrend is beginning to fade away and the sellers are jumping into control. The only way the buyers can save this and push the price upwards if we continue to develop higher lows in this uptrend. If we break down from the 6,000 level over here, we're breaking a prior higher low. We're going to push into the 50 and potentially into that 200 moving average as the selling pressure has not been absorbed. So at the moment, the sellers are starting to step in. The buyers are still in control, but they are losing their steam. That is what we're seeing here. If they do lose the steam, they lose control and the sellers take over and the buyers fail to absorb that selling pressure, we will see the S&P 500 potentially correct back to the 50 EMA, 5,900, worst case scenario, 5,700. If of course we can absorb that selling pressure and we break through this level, then we have in open skies, clean, easy sailing towards 6,400 or even higher. So overall, there is hope, but we are starting to see some early signs here of potential corrections and reversals developing. That is it for the broader markets, guys. Let's jump into Bitcoin. As we said, we are taking a look at the short term, having now retested and bounced from a critical 2-month long support. We're going to discuss what this means. We're going to discuss the worst case scenario. We're going to discuss exactly what the buyers need to do to not only save the short term, but the macro chart as well. We'll also be taking a look at the macro charts and the total cryptocurrency and altcoin market. So before we get into that, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You're going to be supporting me making this content for you on a daily basis, and you'll support yourself trading on exchanges I trust and get access to all those exclusive bonuses. Check it out. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get back into it. Now, I want to start on the most important matter, and that is the weekly chart. So we'll start on a higher time frame, and then we'll build it down to the short term. The weekly close is occurring in 23 hours and 36 minutes. So by the time you're watching this, most likely 23 hours. The weekly price is sitting at a very, very dangerous position. And that is, of course, below the prior weekly range high. And currently, as a consequence of the price being below the weekly range high, we can also see the RSI is below the 62.09 level. Historically, the breakdown of the 62.09 on the RSI over the last 10 years has resulted in 8 corrections larger than 10%. Now you're probably wondering, only 8 corrections? There's only been 9 instances where the RSI has broken down from above the 62 to below the 62. So out of the 9 instances, we have seen corrections of the RSI from above the 62 to below the 62.09. We have seen corrections 8 of the 9 times greater than 10%. So that is a massive probability in favor of a potential correction to the downside. And again, a 10% correction of Bitcoin is no small amount. So this isn't to say history is going to repeat exactly as it done before. This isn't to say this has 100% guarantee we are going to correct. What it is to say is historically, 8 out of the 9 times, we have seen corrections for Bitcoin of 10% or greater once we see a weekly close, which results in the RSI pivoting below the 62.09. Let's just assume we see the weekly close at 102,500. A 10% correction of Bitcoin could result in Bitcoin dropping as low as $92,000. Something to keep in mind. So that is the first major warning sign. We've got the weekly close coming up in 23 hours, and we run the risk of dropping below the 62.09, confirming that macro momentum shift, which historically has resulted in significant corrections of 10% or greater over the life of the last 10 years of Bitcoin's price action. That is something we need to be, of course, very concerned about. Number 2, we run the risk of confirming a deviation setup. A deviation setup is very simple. When we have a range high, this is going to be our range high on the weekly, okay? We have got a breakout of the range high with negative momentum. So with that breakout, we have got a bearish divergence, and then we see the price action close back below the prior range high. When we see those 3 things occur, so number 1, a range high established, number 2, a bearish divergence on the breakout of the range high, and number 3, the breakdown and close below the prior range high. When we see these 3 things occur, this does confirm a deviation setup. Deviation setups are reversal patterns. That doesn't necessarily mean we are going to see a steep correction all the way down to 70,000, but it does mean in conjunction with the 62, the odds are stacking in favor of a potential pullback. So it's about building an argument, it's about building a case, it's about gathering information and developing a objective plan which has a greater probability of success than the opposite alternatives. Okay, so we've got all this data suggesting now the potential for corrections begin to start to stack up. So at the moment, we're looking at the potential bearish divergence, so the 62.09 breakdown in RSI, which has resulted in historical corrections of 10% or greater, with a deviation setup and confirmation of that deviation setup. To show you a weekly example of a deviation setup, the most obvious example, we're not showing you this example to confirm the top, we're showing you this from a purely analytical perspective. A deviation setup, we have got a range high, so point 1, we have got the breakout with the bearish divergence. Point 2, we have got the loss of the weekly range. Point 3 over here, confirmed with the breakdown of the 62.09. We've got the exact 3 things that occurred here occurring again. We talked about this 4 weeks ago. We warned everyone 4 weeks ago at $110,000 that we were copying the 2021 top. Not to say that we are in a top, but to say we are running the risk of potential correction if these specific events unfold in this particular manner. And so far, they are unfolding in this manner, which could result in a correction. So again, the deviation pattern, the bearish divergence, the weekly confirmation below the RSI had resulted in a correction for Bitcoin and runs the risk of doing so again. So again, this isn't to try push the price down. This isn't to spread FUD. This is to be completely and utterly objective in the price action. That is the weekly chart. That is what it's looking like. Where could we see the price action correct to on the weekly? If we do see this play out, we will likely see Bitcoin push down into 94,000, which is about an 8% correction. We are looking at our first potential support over here, right over here at around 94,000 to $93,000. This would be a bearish target for Bitcoin. Now, a lot of you have been paying attention to my channel for quite some time. Some of you have been watching me for 3 years. As you would know, I turned bearish back over here in 2021. The same pattern we had over here, the deviation setup, is why I called the top in 2021. We ended up buying Bitcoin and turning macro bullish to 16.5k, and of course, we called the bull market initiating at 31,000. We have been macro bullish this entire time, but you would know a few weeks ago, for the first time ever, at 110,000, I turned my macro bullish sentiment off and I personally went more neutral, playing it, and I quote, a wait and see approach, a neutral approach, turning back bullish above 110,000 and high time frame bearish below the weekly range high. So we are sitting now in this high time frame bearish section. If we continue downwards, I will remain short. I will remain high time frame bearish until we see corrections to the Gaussian channel upper band, 50 EMA, or show demand at these high time frame supports. So although we have talked about all this, the good thing, and this is the good news, none of this yet is particularly confirmed, as we have not had that weekly candle. These things we have discussed in here are all major risk factors, but Bitcoin still does have a chance to close the weekly back above this 104.5k level, back above the weekly range high. And this is where the short-term charts become very important. So let's jump now to the short-term. We'll discuss the bearish scenario first, and then talk about the bullish and what the buyers need to do. So first and foremost, we are in a horizontal consolidation. The horizontal consolidation has spanned on the low side around 2 months. On the high side, we have spanned from around the 23rd of May. You can see a very clear horizontal consolidation between our lows and our highs. If we take a measured move from the low to the high and apply it to the breakdown, we can see that would take us into that 94 to 93,000 region. Essentially, what we would see is we would see this entire low historical resistance range, okay? The visible range volume profile gap over here, which is a low historical resistance range, we will see that fill toward the downside. Meaning, if we do drop below this 101.5k level, we have found support twice, 3 and 4 times, right? If we drop below here, we will trigger a steep and aggressive correction. At the moment, support is support until, and I really want to drive this home, support is support until it is not. So the potential for reversals to develop from here are still on the table. They are still on the table. The buyers still have a chance to push the price back upwards. It is only really game over for the buyers here if we see this last line of support, this 101.5 to $100,000 level breakdown. If this horizontal support that we have held for 2 months does not continue to hold, in fact, if we break below this region, we enter this low historical resistance range and we'll see a steeper correction into 96 to 93,000, this prior level of horizontal consolidation, which would confirm the breakdown of the weekly, confirm the deviation setup, and mostly facilitate around an 8% correction of the expected 10% correction we would see from the 62 breakdown. So we can see how the pieces of the puzzle here on the short term are now confirming how this could play out on the macro. That is all of the bearish stuff we're going to talk about, because I think that is enough, right? There's a lot of warning signs here that could develop and a lot of bad things. Let's talk about the bullish things first and foremost now on the high time frame. At the moment, Bitcoin is still in a macro uptrend. It doesn't mean it is macro bullish. It is in a macro uptrend. They're two different things. A macro uptrend is simply an identification of the direction of the price action. It is not an assessment of where the price action will go, okay? The macro uptrend is still intact. Are we macro bullish? The answer to that right now is no. We are more neutral than bullish. The reason why is, again, if we're looking at the trajectory of the current price action and we're assessing the strength of the current price action, it is negative to neutral. We cannot be bullish right now. We can at the most be optimistic but cautious. Expect the best, but plan for the worst, which is what we've been saying. Only upon the sustaining above this level and the breakout of 110 do we get confirmation that this trend will continue upwards. And therefore, breaking 110 is what is required for us to become bullish again on Bitcoin. But when we're looking at the macro trend, where could Bitcoin go for the macro trend to remain intact? That is the 50 EMA and the Gaussian channel upper band. So for the long-term holders or people who are long-term on Bitcoin, provided these levels hold, Bitcoin is still in a macro uptrend, which means we could see a 15-20% correction, then just bounce and continue upwards. If we look at when the bull market began over here at 31,000. This is when we saw the initial discussion for interest rate reductions, this is when we saw the initial discussion for ETF approvals, right? We saw all of this happen here. That is when the bull market began. Look at all the demand that came through as a consequence. But look what happened at that level. We were breaking above the 50 EMA and the Gaussian channel upper band. The level we've now held above this entire time. So we're holding above this level. The macro uptrend is still intact. If we drop below this level, we then enter a macro downtrend. That would be a bear market, okay? So at the moment, macro uptrend is still intact, but the price action is neutral to bearish on the short term. Let's jump over to the bullish scenario. So this is very important. The bullish scenario remains possible while Bitcoin holds this 2-month long low, okay? As I've said already, only the loss of the 2-month long low will result in a continuation downwards. While we remain in a horizontal consolidation, this is neutral, okay? It is a neutral consolidation with high time frame exhaustion. If we think about this a little bit for a second, after we see aggressive multi-week continuations upwards with increasing volatility, we can see volatility increasing as the price action pushes away from the 50 EMA, and then we move into a sideways consolidation with decreasing volatility. What do you think that looks like on the weekly chart? That is expressed as exhaustion, right? We are seeing the price change from aggressive volatility upwards to decreasing volatility and sideways, which then is expressed as falling momentum and exhaustion. That doesn't necessarily mean the price action is bearish, and that is why I didn't say the price action was bearish. I said the price action here is neutral to bearish, okay? Neutral because we're in a horizontal consolidation, but bearish because our high time frame indicators are potentially signaling a further downtrend is possible, okay? So when we're looking at the short term here, when we contextualize this, we have to be aware that while this low holds, the price action is still in a horizontal consolidation, and thus it is plausible for the price action to reverse upwards. If we break back above 104.5, which is the POC level before the weekly close, the weekly candle will sustain and it will eradicate the potential for that 62.09 breakdown and the deviation setup. Hence, it will be bullish. Let's play off that for a second. If we are able to do that, the best case scenario, again, the measured move for the breakout would be 115, 116 for Bitcoin if we break upwards. But for us to see that move, it needs to break through this high. If we break this range high at 110, we continue upwards. Let's now take a look at the short term. The short term is in a very clear downtrend. We have got confirmation of a downtrend both here on the price action chart, but downward diagonal trend line right over here, and of course with the RSI representing a downward diagonal trend line. For us to be confident that Bitcoin is not going to break down here, we need to see the RSI break upwards, which will increase the probability of the price action breaking through the trend line and continuing up to resistance. Those are the things we're watching out for Bitcoin to turn bullish in the short term and continue upwards. Again, the 106K level is going to act as the trigger for a continuation to 110. So if we break 106, we continue to 110. But for us to do any of that, the momentum on the short term, which has been falling as a consequence to selling pressure over the short term represented by the trajectory of the trend line indicated by that diagonal trend line, needs to flip back bullish. While it remains negative, there is still a lot of exhaustion and weakness which could develop into a breakdown of this support level. So a lot is going on, guys. There's a whole lot of elements to this. There's more than just the price action right now. There's always more than just the price action. There's the geopolitical tensions. There's the global conflicts. There's the potential reduction of interest rates. There's a whole range of things that you need to be aware of. And all these things can dramatically and very short term impact the price action. We look at the 1 minute chart over here just for Bitcoin, right? We've seen at this point of reversal, I'm going to show you. We're going to go to our group chat for a second. I'm going to go ahead and bring up a post. This was at 9:48 a.m. Okay, this post. All planes are now outside of Iranian airspace. 9:48 a.m. was this green candle. We're going to go ahead and show you. It was this green candle. We'll draw an arrow. This one right over here on the 1 minute chart, 9:48 a.m. You can see how just that news event alone, that announcement, dramatically caused a reversal in this price action. So with that being said, the price can very much change direction on the short term based on however this news develops over the next 48 hours. So it is a high risk environment. Things can adapt and change. And when things change, you need to be able to adapt and change. Thanks for tuning in. Have a fantastic day. Catch you in tomorrow's video. See you then. Bye.